Hello guys, welcome to the Trading Insights channel. In today's video, I will be teaching you on how to read market structure. This is the first video in the series of videos where I will be teaching you how to trade using smart money concept strategy, and not only know how to trade with a smart money concept strategy, how to read market structure as well, because this reading of market structure might actually look simple, but not everybody understands it. From this video, after learning how to read market structure, you can read market structure from any asset you want to trade, be it crypto, be it forex, be it stocks, and whatsoever you want to trade. It's not only applicable to forex. With the help of this video, you can also read market structure from any asset you intend to trade. And also, this mentorship program will be going on for a few weeks, so I will be excited to have you all through this program. It's gonna be so impactful. So guys, I want you to all stay tuned and learn from the little knowledge I have to share with you guys. Okay, my name is SMC. In today's video, I'll teach you how to read market structure and the different types of market trends in order to make better trading decisions. So that's what we'll be talking about today: market structure, the market trends and movement. So let's dive right in. What is market structure? So most people might answer this question as market structure is the movement of the market structure is the direction of the market structure is the way the market goes or operates. Most people might come up with that answers, but you are all right, because market structure has to do with the behavior, direction, condition, or current flow of the market. Basically, market structure tells you if the market is trending or not. Let's talk about the key concepts in market structure. We've explained what market structure is. Now we talk about the key concept in market structure. What are the key concepts in market structure? We have a bullish and a bearish market, and also a sideways market. Most people call it consolidation. That's when the market is in an indecisive state. That is a sideways market. So what do we expect to see when the market is bullish, when the market is buying? Call it, at that point the market buys. So what the market does is, after it creates a low, now that low forms a high. We call that high a higher high. And when the market breaks a structure, comes back to retest a previous low, which is this low here, it forms a higher low. So now what the market does basically is, when it breaks a level or a structure, it forms a new higher high, and it now goes back to retest that level of structure, forming also a higher low. It keeps on with the cycle, keeps on going that way, breaking a high and forming a higher high, coming back to retest and going back up. So that's basically a bullish market, how the bullish market looks like when the market is buying. Now, how can you tell when the market is selling? When the market is selling is when the market fails to create new higher highs, or should I say new highs. Like what happened here, the market failed to create new highs here, so it intentionally broke below this low, now forming a lower low, while coming back to retest the break of structure here on this previous low. Coming to retest here, it creates a lower high. What we would say here is that the market has changed direction. It has changed its direction. It's no more going on a buy, it is now on a sell. When the market is on a sell, it creates a lower low and a lower high, lower low and a lower high, lower low, like that breaking of structure. So when once the market breaks out of a low, know that the direction of the market has changed from a buy to a sell. And here, over here in the buy side, when once the market keeps on breaking highs, not the low, when it keeps on breaking highs, that means the market is still on an uptrend. Then also a sideways trend, or a consolidation market, if you may call it. Now a sideways is when the market fails to break either a high or a low, and it keeps on going there in that range. It fails to create a high or a low. That is a sideways market, meaning indecision, meaning at that point in time there is no much traders in the market. there's no much volatility. Don't worry, in subsequent videos we will talk about volatility and the rest. When the market fails to create highs or lows, it means it is on a sideways or consolidating. Okay, before we dive right into the chart to do some examples, remember I said once the market breaks a high, it creates another high. That shows that the market is on an uptrend. Breaking this high is called break of market structure. Once this market breaks this high, it has broken that structure. That was an area of resistance, if I may call it, but we've not gotten to that yet. In subsequent video, I'll also explain what resistance and support is all about. But this was an area. This last high was an area where the market broke off and created a new high. So when once it breaks this structure like this, it keeps creating highs. So I want you to understand what market break of structure is. Break of structure is when the market breaks a high and creates a new high higher than that previous high. That is what break of structure is. Okay, let's go through some few examples in the chart in order to align to what we've learned here. You can see that the market is on an uptrend here, creating higher highs and breaking of structures, creating new highs, breaking of structures, and creating new highs, breaking of structures and creating new highs, breaking of structures and creating new highs. From what we've seen here, the market was on an uptrend, breaking of structures and creating new higher highs and breaking of structures and the same thing. That's to show you that if you wanted to trade here in this market, you would have been looking to buy in the direction of the market, which is on an uptrend. We can say it's bullish because we call it, that's the trading terms we call bullish when the market is buying. In the market we're creating highs, higher highs and creating higher lows and creating high until when it failed to break this high. I want you guys to notice something here. The market failed to break this high here. After creating this new high, it created a low here, then failed to break this new high. And then when it failed, look at what happened here. The market now came back and broke out from this place, now changing direction. The market changed direction, breaking out of this point here, which is now a change of character. A change of market character is when the market has changed direction from going up and is now going down. So now we saw that the market failed to break this high and then broke out from this low, creating a low and now creating a lower high, now creating another lower low, creating a lower high, just like I showed you guys there. Creating a lower low, creating a lower high, just like that, just like that, just like that, just like that, just like that. So I know this chart might not really be clear enough, but I hope you guys get the picture of what I'm trying to show here. This market failed to break this, it failed to break this high here and then broke this low, meaning that the market changed direction from going upward to a downtrend. Later on, I'll also teach you guys how to draw a trend line on the chart. Please let's not make this mistake that I see newbie traders making. The market has not yet broken out of a low and then they started selling the market because they saw this small movement downward. Imagine if you had sold this market now, you would have been running on a loss. It's always good to work with a trend. This is when we got our confirmation that this market has started selling. It's no more on a buy but now on a downtrend. So we should not make that mistake of trying to, because the market reversed. Market would always do its thing by coming back to retest some levels and also going back upward. So we should avoid those mistakes and we should not fall into that mistake of when the market has not yet changed direction, you start selling it. So we shouldn't fall into that mistake. Okay guys, we've come to the end of this video concerning market structure. I would like you to consider subscribing to this channel and also turn on your notification bell. I know you wouldn't like to miss a piece of this mentorship program. Thank you for being with me throughout this video. I really appreciate that you joined this program and also watch these videos. I'm still a Mimi Yang by name. Please consider subscribing to this channel You can also let me know how you feel about this video in the comment section, and you can also help me share this video so other people can learn from this. Thank you very much, guys. I really appreciate your time for staying throughout this video to watch this video. The next video we will be talking about is supply and demand, how to draw supply and demand zones. So that's what we'll be talking about next time. Please guys, don't forget to hit the bell button after subscribing to the channel so you won't miss out when I post this video same time next week. Thank you for staying here with me, guys. I really appreciate it. Don't also forget to share this video so that other people would also see this video and find the information useful. Thank you very much, guys. I really appreciate for spending your time all through here. Thank you.